This is an extended version of Bloomberg surveillance. Welcome on radio, on television. Tom Keene and Lisa Abramowitz. Sean Farrow is off today as we are seconds away from the opening bell. Lower, that is the direction of travel. Not much. This is an afterthought considering the political news of the morning. And that's, to me, really notable considering where yields are. We were talking about the shift upward. Lower, we can see right now the 10-year yield, 4.15%, almost 4.16%.
And to go off script here, in our special coverage, we forgot claims. It was right when the Prime Minister came out of the door of 10 Downing Street. Have we seen with Mr. Cameron and Ms. May and with Boris Johnson, and claims gave Jerome Powell a 75 basis point statistic.
Yeah, which is not exactly what he wants. And there is this conviction right now. A good number. Good news is bad news, and that's what we're seeing on Wall Street, very much dominated right now by the United Kingdom. And Liz Truss stepping down, really highlighting, though, the tenuousness of an inflationary environment for political parties globally.
In our special coverage, we're on until Tottenham wins again, right?
So then we're going to be on to the day we die. Right now, we want to just get a sense, though, honestly. It is important to put this into perspective, and Michael Purvis can help us do that. Just briefly, before diving back into the political fray in the United Kingdom, Michael Purvis of Talbot Capital, as you've been parsing through all of the political discussion, how much of a message do you take back to markets, to this idea that they are in charge and they're imposing fiscal discipline?
Well, I think there's a really important overarching theme here that we can divine from this whole Truss episode here, which is that, look, the Fed has been on this sort of America First monetary policy that has been, of course, very hawkish as it needs to tamp down inflation here in the U.S. But when you have fiscal experiments overseas that are that Truss put forward and that are not sensible policies, the what it means for global risk assets is really sort of magnified here. So you have a collision. What I'm saying here is that the range of big, weird outcomes for the markets is much higher when you have this collision of bad fiscal policy with what the Fed is doing right now. And I think that's very, 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 very important. I mean, I think it's a fair statement that central banks generally like low currency balls here, right? It just makes their job easier. And we're in a state of where, we can talk about rate vol being super high and, of course, equity vols high, but FX vols are super, super high here. And it ultimately makes the central bank, we're all grappling through when central banks are going to be more, sort of not led around the nose by inflation and hydrocarbons, and when they can actually lead as opposed to be reactive. And these types of situations only make central banks, whether it's the BOE or even spill over to the Fed, more reactive.
Michael, that's right where I wanted to go. Neil Shearing to join us later in this hour with a real focus on the United Kingdom economy. But as Mr. Purvis, folks, talks about vol and, of course, his careful study of the Pacific Rim and ADXY, it is thrilling to bring you this morning Nick Benenbrook. He is Wells Fargo international economist, but he viscerally understands the Pacific Rim with his heritage of New Zealand, and far more, is the only person on the planet who has been award-winning in foreign exchange in back-to-back years. Nick, I guess it's good you're not an FX strategist this morning. Purvis talks about FX vol. Give us the vol we're going to see on British pound sterling.
Well, I think certainly for the next few days, we can expect this volatility to continue. It might actually be in the upwards direction because you could argue that political and policy uncertainty is reducing in the United Kingdom, and so we might see a bit more of a relief and go back towards the sort of even up to the 113, 114 level. So, I think we're going to see some further up move. Over the months ahead, I think as dust settles, we'll start to see markets calm down a little, and we might actually start to see the pound, when it's faced with the reality of the UK economy, the pound might start to give back some of those gains.
Nick, to what Michael Purvis alluded to, and if it is Britain in crisis, maybe it's Hungary in crisis, maybe it's Thailand in crisis. Will Jerome Powell need to blink because of the international economics and politics we observe?
No, I don't think you will have to blink. I mean, we would still expect a 75 basis point increase at that November meeting from the Federal
Yes, of
Reserve.
course.
And as one of your, you know, I think we still look for a 50 and eventually getting to 5% on the Fed funds rate. I think the UK events are instructive in the sense of it does come back, as one of your previous guests said, how sort of unorthodox or unusual are the fiscal policies. And, you know, they were fairly unorthodox in the case of the UK, just in terms of the magnitude and the way that they were delivered. And it doesn't look like here in the US, for example, or even across the Eurozone in general, that we're going to see such expansive fiscal policies. So for the major markets, I think it won't be an issue. But for the markets that you mentioned, the likes of Hungary and Thailand, they may face some challenges.
Michael Purvis still with us. And Michael, I'd love to get your take on what Nick is talking about, that there is some more stability, but the stability speaks to a more significant downturn, at least in the short run, based on the lack of borrowing. How much are you factoring that into some of your outcomes and your theses?
Well, look, I think what this whole Truss episode really sort of reiterates is that we need kind of boring policy, if you will, right? And I think there's this inevitable tension where you know, like a politician's one of their biggest enemies is surging food and energy inflation, and there's always sort of a temptation to put in novel fiscal policies when they're actually the worst things for the situation. So we kind of need to see things get a lot more boring. But I agree with my co-guest that I think if for the major markets here, if things can be a little bit more static and stable, then more of the blow-ups will be relegated to more the niche markets here. But I think if the takeaway here from this Truss situation is that she's gone and we're going to go to a much more technocratic and less quote unquote innovative fiscal policy, so responses to this high inflation, that's going to be sort of enhance market stability here,
yeah.
which is sorely needed.
Perhaps another way of saying talk of MMT might have died a very rapid death over the past few months. Nick Benenbrook is still with us. I am wondering what this means in terms of energy policy for Europe at a time when a lot of nations, including Germany, were looking to spend extensively to stave off some of the gaps in the household budgets. Does this torpedo some of that, or does that pressure the euro and just German yields higher in a way that hasn't fully been realized yet?
No, I don't think it's going to derail those energy price plans that we've seen across Europe. I did see some estimates the other day, maybe in the region of 40 to 50 billion euros to sort of help support the energy price plans there. And, even going back to the UK experience, it wasn't so much the initial energy price cap that caused the consternation on the part of market participants. It was the growth plan in late September and the unfunded policies there. So coming back to my earlier comment, I don't perceive the extent of fiscal support or fiscal expansion that they're talking about across Europe as being so dramatic that they'll have to move away from those policies.
Nick Benenbrook, just for you, and with such respect for your FX ability to call over the years, I looked at sterling New Zealand dollar. I don't know what that's called. Is that sterling Kiwi? Is that the fancy talk? I've never done it.
I love this.
I've never done it before. But Nick Benenbrook, the bottom line is massive New Zealand strength over 20 years, and now we're buttressed down at the low end, a strong New Zealand dollar trading range. What are the ramifications for the global system if we see things like sterling Kiwi break out to new sterling weakness? That's an instability that Michael Purvis was talking about.
Well, again, I think coming back to your previous comment, though, Tom, it depends on the extent of volatility and just how dramatic those moves are. I've been around for a while, 20 years, maybe even longer. We've seen some unusual things. The Australian dollar trading above parity against the US dollar, for example, would be one of those. So I think if this is just reflective of maybe increasing commodity prices in general and just the relative performance of these economies, then if you continue to move in that direction, so long as it's orderly, I think it's not problematic. It does 20 years ago, I was living in London for a couple of years, so maybe I should be living there now. It would have been much nicer given the Kiwi sterling exchange rate.
Wells Fargo international economist Nick Benenbrook, thank you so much. Also, our thanks to Michael Purvis for your guidance here. I do want to just bring you, and we've been talking about the lettuce concept for a while, but the reason why I find this interesting is because this has been just lighting up Twitter with Aldi stores in the United Kingdom putting out a Twitter post saying, what a great day to be a lettuce. And it's gotten,
it's back on this.
Well,
I mean,
the reason why is because it perfectly encapsulates both the issues with food as well as, just in terms of the gallows humor. I keep going back to this because where do we get that feeling of, oh my goodness, we're seeing our mortgage costs go up, we're seeing our energy costs go up.
This is from Aldi stores.
Yeah, this is from Aldi stores in the United Kingdom. What a great day to be a lettuce. People are loving it. There are all sorts of other memes, etc. But it really does highlight the moment. That's why I keep highlighting it.
We welcome all of you of Global Wall Street and all tuning in on radio and television. An extraordinary day. I'm going to do a quick data check here, starting with sterling, 112.58. Red and green on the screen. Thankfully, equity market's not giving us a story. In the middle of earnings season, I guess I could say the 10-year real yield out to 1.71% is news, and United States yields are higher today. It's all been overwhelmed by the international relations of the resignation of the Prime Minister of the United Kingdom. Let us listen to Liz Truss earlier this morning.
We set out a vision for a low-tax, high-growth economy that would take advantage of the freedoms of Brexit. I recognise, though, given the situation, I cannot deliver the mandate on which I was elected by the Conservative Party. I have therefore spoken to His Majesty the King to notify him that I am resigning as leader of the Conservative Party.
Prime Minister Truss from that podium outside 10 Downing Street and the long walk back through that famous black door. Joining us now, Lizzie Burden is at 10 Downing Street. She's been on this story from the get-go.
That is completely divided, and these divisions have been sown for years, perhaps going back before Brexit, and that's what's so difficult in this leadership race. We heard from Graham Brady, the chairman of the 1922 Committee of Conservative Backbenchers, just now saying that there's going to be a leadership election by Friday, and Rishi Sunak may be the bookies' favourite, but he's incredibly divisive in the party because he's seen as having brought down Boris Johnson, even though he would be such a shoo-in to Jeremy Hunt's economic policies. He faces such a mountain to climb. But what you might see, even though this party is so divided, is that because there's such a fear of a general election, they know how divisive a leadership contest internally can be, that they all just fall behind one candidate and it doesn't actually have to go to the party membership.
Is Jeremy Hunt just playing hard to get? Does he actually want to be Prime Minister?
No, but this is all that markets care about, that Jeremy Hunt is safe. You've seen a lift in the pound and gilts the last time I had a look, and that's because markets are confident that these fiscal plans are going to go ahead. Graham Brady also said that the fiscal statement on the 31st of October that we were expecting is going to go ahead. It means that the Bank of England can take account of that on November the 3rd. And yeah, it's really all markets care about.
Lizzie, thank you so much for your coverage this morning through surveillance. I know you're going to be there through the United Kingdom afternoon, but we all Lisa and I and John greatly appreciate your effort today at 10 Downing Street. We return to Guy Johnson getting ready for a 10 o'clock effort in New York. And of course, not only up to speed on all of this elite talk, but I think Guy Johnson's got a spectacular knowledge about the other
Oh my goodness.
as well.
Can I bring this out?
I'll let you bring this up from a very good source, Swinford over at the Times of London, and then you can go to Guy Johnson on this.
Well, Boris
because
Johnson.
Johnson to Johnson.
Yeah, exactly. The Times of London is saying that Boris Johnson is expected to stand in contest at a time when perhaps, where was he? The Caribbean? And people are wondering or trying to find this. But Guy Johnson is with us. Guy, your reaction to this headline?
Maybe he will cut his holiday short. Maybe he will return. It's interesting. So you've got a sort of two-stage process here. And I think we need to think about those two stages as being distinct. So it was interesting to hear what Lizzie had to say about the possibility of one candidate ultimately being put forward. Is there the tolerance within the Conservative Party after the huge volatility we've seen over the last few days for a Boris Johnson return? Is that something, are they prepared to go back to what was a fairly chaotic effort inside 10 Downing Street from Boris Johnson and his team? Or are they looking ahead thinking what we need here is actually stability? And Boris Johnson, as John Micklethwaite was putting out a little bit earlier on, not exactly synonymous with that, Tom.
My amateur take, Guy, is Johnson was thrown out because of scandal, cocktails, whatever it was. I don't remember the details. I don't care. Are the Brits, as Farrell would say, are they forgiving of that to say you were thrown out, you served your punishment, and would we see a different or new Prime Minister Boris Johnson October 29th?
There's been very little evidence of a new Boris Johnson, but I guess anything is possible. Boris Johnson, I suspect, is very popular within the Conservative Party grassroots, i.e. the party, but within the parliamentary party, which ultimately is going to decide which two candidates go forward, I don't know. And that is where the challenge for Boris Johnson is ultimately going to be here. Clearly he would like to return. Right. Clearly he is interested in retaking 10 Downing Street. But nevertheless, he has got to convince the parliamentary party that that is a good idea. And I think they threw him out because they were sick and tired of the turbulence. We just had even more turbulence. I'm not sure that they want any more
but Guy,
at this point.
There's also an issue here with the overhang of Brexit, because Boris Johnson oversaw the whole process. How much is Brexit still a popular decision, especially in the wake of the turmoil that we've seen over the past couple of months?
It's still a hugely divisive issue, Lisa, and as we were hearing earlier on, it is not a completed project. And therein lies the problem. Boris Johnson didn't get Brexit done. Do we want to return to the instability also that the issue of Brexit, when pursued aggressively, can generate? The Northern Ireland Protocol, we haven't talked much about that, have we? But it still lingers as an issue. It was interesting to hear what Mr. Macron over the channel had to say an hour or so ago.
Yeah.
The issue now is the parliamentary party is in job preservation mode. Is Boris Johnson, is that boosterism, is that cakeism going to be enough to get him back into prime position? I don't know.
I want to frame the next 13 minutes for you folks, why you need to stay with us on radio and television. Neil Shearing's going to be up next with piercing conversation, but I've got to continue with Guy Johnson on the former prime minister. Is there almost a yearning by all for Boris, I can't believe I'm saying this, Guy, but Boris stability? I mean, is that the emotion that we're going to see into the British evening?
I think that's an oxymoron, Tom, but yes.
I was going to say so.
Could you put Boris Johnson and Jeremy Hunt together? Remember, they competed. You asked the question a little bit earlier on.
Come on. Are they on
does
speaking
Jeremy Hunt
terms?
want to be prime minister? He competed to be prime minister. What I think is interesting about Jeremy Hunt is has the Boris wing of the Conservative Party forgiven Jeremy Hunt for basically competing with Boris Johnson? I suspect the answer is yes. Have they forgiven Rishi Sunak? I suspect the answer is no. And that's where I think all of this becomes extremely interesting as to kind of which factions are positioning sort of behind which candidates. But I think I come back to this issue. We have just had a huge bout of instability. That is something that the Conservative Party, I think, is desperate to put behind them.
Guy, how much, as we look to the likelihood of a Boris Johnson kind of prime ministership, yet again, are people looking for a celebrity versus a technocrat?
I think that comes down to the same issue, Lisa. They would like to be able to win the next general. They would like to be able to win the next general election. Are you going to do that with celebrity, or are you going to do that with stability? And we've still got 2 odd years to go until that general election. The searchlight of public opinion has yet to really settle on the Labour Party and its leadership. It will do at some point, and it will be a huge challenge for them.
I think my solution there to Guy and to you, Lisa, is that Kenneth Branagh ought to come back and run for Prime Minister since he was just doing the Boris movie as well.
Guy Johnson in London, thank you so much for your coverage throughout the morning. I'm sure we'll be hearing much, much more, and you'll be joining starting at 10 for full coverage. Right now, we want to get a sense, just going to the economic picture, really at the core of the turmoil and the core of what's to come. Capital Economics Chief Economist Neil Shearing joining us now. What's your sense, Neil, of how the ramification of this will play out for the United Kingdom as the world's 6th largest economy at a time of such tumult, both from the leadership as well as, honestly, from an inflation standpoint?
Well, look, the 6th largest economy at the moment, but factoring the weaker pound, it may not be the 6th largest economy for much longer. I think that the key thing, and you touched on this in some of the reporting earlier, is less at the moment who's in number 10 and who's in number 11, who's running the Treasury, what they're saying about fiscal policy, the extent to which there's a steady hand on the tiller there, in the context of all the tumult that we've seen over the past several weeks. Now, the news that Johnson might be back and putting his name on the ballot paper, I think is literally the last thing that the UK bond markets will want to see. So let's see how that one plays out. But the economic picture is pretty grim, I have to say. There's a huge squeeze in real incomes coming down the track. Interest rates have got to rise further, irrespective of what's happening to fiscal policy. The housing market looks vulnerable to me. The Bank of England needs to do more work to squeeze inflation out of the system. Every which way you look, there are challenges.
Neil, I want you to talk, and you've done great work on this at Capital Economics. I'd really say industry leading work on the polarity. The delusion, folks, is I go from Heathrow in on a limo to the fancy hotel, walk across the street, enjoy Queen Victoria Street, fly home and say I went to England. And that's, of course, a complete fiction. Neil Shearing, outside the elite climes of London, how bad is it for the United Kingdom economy?
It's bad. It's bad in London. It's bad in the United Kingdom generally. I think you're right. There is huge disparity, both of economic growth and income growth, and also wealth within the economy, and that's greater to a much greater extent in the UK than is in the case in other European cities, and there's other European countries, and there's lots of reasons for that. Poor infrastructure, poor skills, poor dispersion of technologies across industries within the UK. But you're correct. I mean, London and London and the southeast incomes and income growth are far higher than is the case elsewhere in the country. But this is not the case that the rest of the country is suffering while London is powering ahead. London is going to suffer in this downturn too.
You talked about the 6th largest economy for now and where it was headed. What do you see in terms of what kind of downturn you're expecting and how this turmoil really plays into it?
Well, look, in terms of the pure economic downturn, I think we're staring down the barrel of probably a 2% fall in GDP, something like that, peak to trough. I think a lot of that will be felt in the household sector, consumers coming under enormous pressure, the housing market and construction coming under pressure too. The question really is whether or not that, in turn, there's feedback loops through the financial system that amplifies those shocks and makes things even worse. Now, interestingly, I think the interesting question from the market's perspective is how much of that is now priced in. It's interesting that the Truss has resigned this afternoon, London time, and the bond markets didn't really move. The currency markets have not really moved. The big move came last week when Hunt came in, unwound a lot of the fiscal measures, and so I think a lot of that risk premium that went into the UK markets has probably already unwound itself.
Neil, we are advantaged to close with you today. Thank you so much. Neil Shearing for Capital Economics. Again, I can't say enough about the firms where get their research from Capital Economics. We protect the copyright of all of our guests. Yes, I'm going to say this now, Lisa, rather than at the end when we're rushing and crashing to break and we're worn out and all that. What an effort by our team today, and that we really didn't see this coming. I would say last night about 11 p.m. New York time, I was like, oh, tomorrow.
Yeah.
But we really, Qantas and the team really pieced this together today with, I think, a great set of voices within Bloomberg and outside as well.
And we have an incredible stable of talent here at Bloomberg. Just to say, take a step back to really paint the picture. The shortest tenure of a prime ministership ever, going back, the second most, going back to the 1800s.
Canning, to the early 1800s,
to the early 1800s, and that was ended by tuberculosis, highlights how fast this had moved. I keep going back to this, that Liz Truss accepted the prime minister role from the Queen and then handed in her resignation to the king because of the transition in power there, the transition in the sort of metaphor of some of this turmoil. How much does this reshape politics in the UK going forward?
I agree, totally.
And highlight the turmoil stemming more broadly from an inflationary regime that is new, at least over the past couple of
Kit
decades.
Jukes with a brilliant note of SocGen today on a 112.46 sterling, alluding to resilient dollar, sterling weaker. But I agree with you that there's ramifications here that our David Merritt talked about, not only for England, not only for financial London and Edinburgh, but also for Wales and Scotland and Northern Ireland.
And John Micklethwaite saying that this political moment went over the edge for this market.
There will be continued news, Lizzie Burden tells us, into the evening of London. Please stay with Bloomberg on radio and television. The Prime Minister has resigned.
Earnings season is here.
Markets bracing for another big earnings season.
Everyone is expecting it to be poor.
Had big markdowns on earnings.
Bloomberg breaks the numbers first.
The bar has already been set pretty low.
The big question is, can it go lower? We're seeing some pretty bad earnings already from those who have reported.
With exclusive expert analysis.
Which aspects of the market are not sufficiently priced?
Is this a macro huge headwind?
There is some really bright light at the end of this tunnel.
When is this floor going to come? When can I start buying?
Bloomberg Television and Radio. The fastest numbers and analysis Jobs Day like Bloomberg. From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
It is 30 minutes into the U.S. trading day on this Thursday, October 20th. Here are the top market stories that we're following for you at this hour. Truss resigns after 44 days. Liz Truss is said to be the shortest-serving UK Prime Minister ever. The next leader, the economy, and the politics still in doubt. Who's exhausted? Jeff Gundlach sees signs of exhaustion in the Treasury market and is looking for a peak in yields. We get the equity and economic take with Mike Wilson of Morgan Stanley and Julia Coronado, a macro policy perspectives. And flying into profit, American Airlines raising its forecast for the fourth quarter on strong demand for work leisure trips. We're going to speak to the CFO later on in the hour. From New York, I'm Alex Steele with my co-host in London, Guy Johnson. Welcome to Bloomberg Markets. Great job over the last couple hours, Guy. Really good stuff. And it appears that the lettuce has won.
Yes, let us all just think about the implications of that. It does seem as if, as you say, the Liz Truss is going to be the shortest ever serving Prime Minister. But we now have potentially more turbulence. You and I were joking on radio last night, Alex, that maybe we've sort of gone past the peak of turbulence in the UK. Clearly, we were wrong. I was wrong, because today has certainly demonstrated that we are not done yet. What I think is interesting here, though, is that you do seem to have a degree of separation now between the pantomime that is taking place in Westminster and what is happening in financial markets. Assuming that this leadership contest goes off relatively smoothly, and we need to talk about that, then the markets may be slightly more relaxed going forward from here. But then they need to focus on what is happening with the real economy, what's happening with the Bank of England. The outlook still in the UK, still fairly grim, Alex.
Yeah, it is pretty terrible. And all joking aside, you got a housing market that's falling apart. You have high inflation around 10%. You have a BOE that continues to sound very hawkish. And the growth perspective from the economy seems nil. It seems like there's no way you're going to avoid an era of austerity. And that's something else we've been talking about, too, that we're in a really tough spot no matter who's leading the government.
It looks increasingly likely. It looks almost certain that the UK is going to experience a fairly severe recession. That is certainly where the data are pointing us right now. The data are pretty grim across the board right now, and the inflation number certainly looks tough. But the tolerance of the UK bond market has now been tested. The limits of policy have now been tested. So do we see Boris Johnson coming back? People are talking about that. He's cutting short his holiday. Would the bond market accept a Boris Johnson government? I don't know, but maybe number 11 is more important than number 10 now. The finance minister versus the leader. Liz Truss spoke after meeting, obviously, key Tory leaders at 10 Downing Street a little bit earlier on. The result was that she resigned. Let's take a listen to her words.
We set out a vision for a low-tax, high-growth economy that would take advantage of the freedoms of Brexit. I recognise, though, given the situation, I cannot deliver the mandate on which I was elected by the Conservative Party. I have therefore spoken to His Majesty the King to notify him that I am resigning as leader of the Conservative Party.
Lizzie Burton joining us now from outside 10 Downing Street, doing a great job braving the weather for us. Lizzie, she's gone. Now what?
Now what, Guy? Larry the cat, the new Prime Minister, is standing in front of the door of number 10, ready for his interview. What timing? I don't know if you can see him.
We can see.
But what's next? We are going to have a leadership election in the UK. Graham Brady, the chairman of the 1922 committee, has confirmed that that's happening. He's also confirmed, and this is what markets really care about, that Jeremy Hunt's medium-term fiscal plan is going to go ahead with being announced on October the 31st, the Halloween budget, and that means that the BOE can take that into account. You mentioned that Boris Johnson might run for the leadership. The other favourite is Rishi Sunak, but of course both of them are massively divisive figures in the Conservative Party. Boris Johnson very popular with the membership, and remember the reason that Rishi Sunak's partly so divisive is because the membership see him as having stabbed Boris Johnson in the back and having brought about his downfall. So it's going to be interesting if it's those two facing off against each other.
So, Lizzie, at the same time, October 31st was supposed to be this medium-term economic plan. Is there any indication that this doesn't go ahead? How do you do that without a new prime minister?
No, it's been confirmed, and I have to say that Jeremy Hunt, his economics has been described as Sunaconomics on steroids. It's a lot of what he's said he would do in the process of decimating Trustonomics is a lot in line with what Rishi Sunak said he'd do in the leadership contest. The focus really is fighting inflation. The markets like it. There's this respect for the economic orthodoxy. Of course, they've got these economic advisors, 2 BOE officials, and it's just such a difference from what Kwarteng was doing. It could match up neatly. There was a conversation earlier about whether it was inevitable that Truss would fall because it's such a difficult inflationary context. I'd have to get it off my chest. I don't think that is the case. It's not just that she went too far too fast. There was a complete disregard for the economic institutions of the UK, and we heard from John Cunliffe, the current Deputy BOE Governor, yesterday at the Treasury Select Committee, and he said that the Kwarteng Truss duo sidelined the BOE, and of course they also didn't let the Office for Budget Responsibility do a forecast. So these factors have to be thought about, but it is of course a warning to governments around the world dealing with the cost of living crisis.
Yeah, absolutely. Lizzie, really great reporting all morning. Thank you for the cat reference as well. We definitely appreciate that. Bloomberg's Lizzie Burden. We'll check back in with you in the next hour as well. So let's turn to the markets for a moment. You're looking at S&P up by 0.6%. DoubleLine Capital CIO Jeff Gundlach was out overnight saying that the flattening of the long end of the Treasury curve is showing signs of exhaustion, and Treasury yields may peak by year end. 10-year now up by about 2 basis points. And that leads us to the question of the day, whether you're looking at UK politics, whether you're looking at the equity market or looking at the bond market, exhausted? I know Guy is. Joining us now to discuss is Mike Wilson, Chief U.S. Equity Strategist at Morgan Stanley. Hey, Mike, it's great to chat with you. We've seen this rally, the stealth rally underway for the S&P for a few days now. Is it exhausted? Are you exhausted at this point?
I think everybody's exhausted, that's for sure. I mean, the markets have a way of doing that to all of us. Even in bull markets, I think people get exhausted. But this has been a particularly trying year because nothing has worked, right? Not bonds or stocks. And even commodities peaked back in April. So it's just been a real, pooper of a year, as we say. And people are tired. They want to get it over with. Let's just get it done and move on next year.
That's the point.
So look, I think the market. I agree with what Jeff is saying. I think that yields, have pretty much priced the Fed at this point. Doesn't mean they're going straight down. But, the risk that in the market for the equity market is on the growth side, right? We've been on that case for the last 3 or 4 months, and we still hold that view. However, markets don't trade in a straight line, and so we're getting a bit of a rally here. We think they can last for a month or two because we're not sure the earnings are going to come down fast enough to convince the market how bad 23 is going to be on the earnings front.
Okay, let's just talk about the timeline around this in a little bit more detail. Mike, you're absolutely right. Everybody just wants this to be over. They want the bottom to be in. They want capitulation. I think everybody's got used to very truncated and short time frames. I remember you speaking at the beginning of this whole episode, talking about the fact that you thought that this was going to be an accelerated cycle. Where are we in the cycle? Because the market's kind of mood and maybe where the economic reality do seem to be in different places at the moment.
Well, that's right. I mean, we call this the hotter but shorter cycle, and everything since the COVID lockdown has progressed at an accelerated pace, like we haven't seen really in any of our careers. So, as we've been saying, the kind of final chapter to this bear market probably will be fast as well. If we had this conversation 3 months ago, and we probably did, I thought we could have this all wrapped up by Thanksgiving and maybe have a nice ending to the holiday period and say, okay, we can move forward. Mm-hmm. But unfortunately, I think it may linger into next year. But either way, that's a pretty darn fast cycle. When you think about the economic cycle, this time started in May of 2020, and we're not even 3 years into it, and we're already talking about recession. So it's all happening kind of to plan. Markets always don't trade exactly in line with that, but we think we're on path now to have the finishing move, which is going to be all about the earnings disappointment, right, which is going to
When is that reckoning, Mike, of earnings disappointment? I thought it was second quarter. I thought it was third quarter earnings. Is it going to be the fourth quarter? Is it next year?
Well, we never thought it would be all done by the second quarter, but we thought there was a chance it could be done by the end of this earnings season. We're losing a little bit of hope in that or faith in that because we're just not seeing the willingness of companies yet to throw in the towel. It's interesting, Alex, markets, whether it's the bond market or whether it's the stock market, has become somewhat addicted to guidance. Okay, for the bond market, it's the Fed, and for equity markets, it's company management teams. And so the bond market is just waiting for the Fed to come out and say we're done. And the bond market won't get in front of that, even though everybody knows they're probably closer to the end than the beginning. It's the same thing for stocks. I mean, every investor we talk to knows the earnings are too high for next year, but yet the earnings remain very sticky on the upside because companies haven't thrown in the towel. So, it's a process that it always takes longer than it should. We think it definitely will be done by the end of the fourth quarter earnings season, which is basically February. But it could be done as soon as November, December. We'll just have to see how this earnings season goes.
Mike, why should I buy equities when IG credit is giving me a comparable yield?
Well, it depends on what kind of investor you are, but we agree with that statement, Guy. I mean, we think IG credit looks extremely attractive, particularly relative to, say, the S&P 500. Now, the only caveat I would throw out there is that the average stock, has been in a bear market now for 15 to 18 months. So what we're advising clients to do, this is the time to get away from the index, start focusing on individual stocks. But if you're talking about the index level, I would agree with you 100%. IG looks more attractive, particularly for the next 6 or 12 months relative to, say, S&P 500. But you shouldn't abandon stocks because of that, because there's plenty of individual names that probably are extremely attractive and look better than both indices.
So, to that point, Mike, where are those opportunities? And I guess it's also my way of asking, what areas are accurately priced for a recession that look interesting at this point?
Yeah, so I'll tell you 3 areas where the numbers have actually come down already would be semiconductors, consumer discretionary, and then comm services. However, unfortunately, those are 3 areas where the numbers probably still got to come further down, but at least we've made a step in the right direction. So we have kind of a dual strategy. On one hand, we still like to favor companies that are very efficient and can deliver operating profit and cash flow in a difficult environment, the superior operators. That's not really a sector call. That's a very stock company specific call. And we have baskets of stocks that track that. On the other hand, we like companies that have actually fessed up. All right, so companies that have cut numbers 3 or 4 times already, and they're just being very realistic, or even maybe too pessimistic about where their earnings are going to be. That's the barbell we think makes sense, and we're trying to get our clients into those types of strategies.
Mike, final quick question from me. Was the equity market, was the S&P frothy and expensive going into the pandemic? And if that is the case, why should we bottom out anywhere close to that level if that was the point at which we thought at that stage that we were expensive?
Well, that's exactly right. I mean, it's the same same coin, different side of the coin, which is that companies over-earned so much during the pandemic that the payback on earnings is going to be more severe than people are anticipating. And you're exactly right. We think we will undershoot ultimately. So we called for a tactical rally this past week. We think that this could last for a little bit of time, but make no mistake about it, we still think that the ultimate bear market at the index level will be lower than where we were last week. And unfortunately, we just got to go through that. And we think that level is somewhere between 3,000 and 3,200. We don't know if it's going to be this quarter or next quarter, but it's probably sometime in that time frame.
Mike, always a pleasure to catch up. We always appreciate your time. We read what you write with great interest. Mike Wilson of Morgan Stanley. Thank you very much indeed. It's been on the right side of some of those trades. Let's get the existing home sales data. It's come through pretty much in line with expectations, 4.71 million, down from 4.8. That 4.8 revised to 4.78. Month on month, that takes you to negative 1.5, a little better than anticipated. So the housing data continues to roll over. It's not rolling over aggressively, it's not rolling over that quickly, but this is the kind of the pinch point. The Fed is certainly having an impact in this space at the moment. People are already talking about the idea that we are in a housing recession in the United States. Coming up, we're going to have more on the Fed's commitment to higher rates. How far will we go? I thought the Bullard comments were fascinating. We're going to discuss what we should expect next. Julia Coronado, Macro Policy Perspectives, is going to be joining us. This is Bloomberg.
This is just the beginning of that pain. Wait until it's a real pain, and then you have even a major financial institution that may crack globally. Not in the US maybe now, but certainly internationally there are a couple of firms that are huge and systemic that can go under. You might have another Lehman effect. Then the Fed will have to wimp out. You'll have a severe recession and you'll have a financial market shock. They're going to wimp out for sure.
Earnings season is here.
Markets bracing for another big earnings season.
Everyone is expecting it to be poor.
We had big markdowns on earnings.
Bloomberg breaks the numbers first.
The bar has already been set pretty low.
The big question is, can it go lower? We're seeing some pretty bad earnings already from those who have reported.
With exclusive expert analysis.
Which aspects of the market are not sufficiently priced?
Is this a macro huge headwind?
There is some really bright light at the end of this tunnel.
When is this floor going to come? When can I start buying?
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
I want to see us have confidence that that core inflation has peaked.
The November meeting has been more or less priced in the markets.
Making sure that we've got monetary policy at a sufficiently restrictive stance so that we're not inducing inflation or trying to get it down.
I think you do want to wait till you actually get to the meeting, see what the situation is there.
Wages are going up, and that's not a bad thing, but if it gets caught up in cost price spiral, that would be bad.
Financial markets are suggesting that inflation should fall rapidly next year and the year after. I certainly hope that they're right.
I think if inflation does start to decline meaningfully, we can stay where we are at this higher level of the policy rate that meets the committee's criteria. And at that point, we could watch inflation fall and get back to 2%.
That's some of the Fed speak in the last 24 hours, showing officials' real commitment to higher rates in their fight against inflation. Joining us with more is Julia Coronado, Macro Policy Perspectives President and Founder. She's also the current President of the National Association of Business Economists. Julia, it's good to chat with you, and I feel like we can marry the Fed and the UK politics story together, because in many ways, the UK is the poster child for everything gone wrong. Fiscal policy gone wrong, high inflation, and hawkish central banks. What's your biggest takeaway here that you might tell the Fed?
Well, actually, I think, one of the interactions here is the combination of a hawkish Fed with vulnerabilities around the world, be they in the UK, be they in Japan. You've got countries where, the UK's decisions and chaos on fiscal policy certainly illustrate the lack of good options for the UK, but all of that gets amplified through a strong dollar and a hawkish Fed that's keeping that dollar on a one-way path upward. That certainly adds to kind of the leveraged trades that amplify the UK situation. We knew the platform that Liz Truss was running on. We knew that the fiscal discipline was not essential to that platform, yet markets absolutely violently reacted, sort of setting off a bit of a domino effect through the LDI funds in the UK. And that's just an illustration of financial fragilities when the entire world is trying to tighten policy at the same time. And in particular, the keeper of the global reserve currency, the Fed, is going faster than anybody else. It really adds to these amplification effects, and the UK is just the poster child for that.
Julia, do you think you could ever see something similar happening in the United States? Do you think you could see the bond vigilantes exerting such influence as we've seen in the United Kingdom?
Well, it's hard to say that we're not seeing some of that. I mean, if you look at the rise in yields, and the rise in the 10-year is one story which is significant. We're at the highest level since 2008, I believe. But then if you look at other fixed income markets, in particular the mortgage market, we are seeing investors step back. It isn't a time where people are really incentivized to take risk and bet on the end of this, bet on the peak rate of the cycle. So given all that uncertainty, the global uncertainty, the uncertainty around the end of the tightening cycle, there's a lot of step back by investors, including those in the US or investors in dollar assets. And that is, I mean, the conditions are terrible. This incredible illiquidity and gappiness. And some real risks right here in the United States. It's not all abroad.
So it's a fair point. And when you look at where the rolling ball of leverage is, it's on central banks' balance sheets, and therein lies the problem. If we take a look at the terminal rate on the upper end, you're looking at over 5% at this point. What's your best guess as to what the Fed's actually going to be able to get to, wrapping in those cracks in the economy that you're already starting to see?
Yeah, I mean, so one, we've got a bunch of leading indicators. We know inflation is the lagging indicator. The leading indicators of demand of interest-sensitive sectors like housing are already clearly signaling that the Fed is moving into restrictive territory because they're responding. And then there's this added dimension of global fragilities. That's a lot harder to calibrate and factor in, especially when inflation is sticky and high domestically. So the Fed is facing a real difficult balancing act here. And some of, the question of how high can they go depends, I believe, on their strategy for how they get there. So if they keep roaring ahead at 75 basis points with no end in sight, I think that adds to global fragility. If they say, which actually President Bullard kind of indicated yesterday, that we can kind of see the terminal rate. We're seeing these leading indicators. He even acknowledged the lags in things like housing inflation. So we understand that, and our goal is to get there and stay there. And I think once we kind of reach that zone where the Fed slows down and the pause is kind of in our horizon, that will, I think, remove some of the pressure and the fragility in global markets. I don't think 5% from a pure macroeconomic standpoint, given the resilience of the U.S. economy and where inflation is tracking, it's not an unreasonable rate to think that we're going to get to and stay at 5% for a little while. But I think how we get there is also important.
The rate of change is important. The second derivative. Julia, always a pleasure. Thank you very much indeed. Julia Coronado, Macro Policy Perspectives President and Founder. This is Bloomberg.
All right, the S&P up by about full 1 percentage point. If you just take a look at the futures for the S&P, you can really see the spike higher. Jobless claims not as bad as estimated. You also have the housing number for existing home sales only down 1.5%. That's spike higher. Coming up, Guy, on those numbers.
We're going to continue with the earnings story as well next. American Airlines says costs remain high, putting pressure on the carrier's shares. Derek Kerr, American Airlines CFO, is going to be joining us next. The stock currently down circa 2%. This is Bloomberg.
We're about an hour into the U.S. trading session, around the highs of the session. Abigail Doolittle is tracking those moves for us. Abigail?
Yeah, we're seeing a solid bounce here for stocks, Alex. The S&P 500 up about 1%, headed to an up week, despite the fact that you have Tesla down 5.7%, their third quarter sales missing. Elon Musk indicating that demand might not be quite as strong as some might hope, so shares suffering. We also have yields higher, but even with that, stocks are up. And oil, which right now is about 88, you could make that the case that that's just the right level, the Goldilocks level. Not too much inflation, not too little demand. Now, of course, the big story on the day, the morning, is UK's Liz Truss resigning as Prime Minister. On this, we have stability for UK markets. The UK 10-year gilt yield is down about 5 basis points, telling you that there's maybe a little bit of a haven bid. On the other hand, you've had so much wild action for gilts, given the BOE's action and then the tax plan, all of the different headlines coming in a little bit, maybe a good thing. The 30-year yield also also down significantly, down 10 basis points. The FTSE 100 hanging in there. And then the pound really quite strong, up 1%, telling you again that markets are okay with this transition in power to whoever the next PM might be. As for Tesla and those deliveries that we were talking about, it's very interesting. They don't really give inventory numbers, but they do have something going on right now that they have not had for several quarters, which is more than 22,000 vehicles that have gone undelivered. Apparently they're sitting on storage lots, maybe transportation issues, or maybe they're just a different way of looking at inventory. It's hard to say. And then finally, rounding it out with what had been a bright spot, and in some ways it is, although the stock is trading lower, American Airlines, they beat top and bottom. They beat profits by 14.5%. It looks like there's good demand for travel for the rest of the year. Some of the other carriers are talking about, but costs are rising, so the stock is down a bit. But you can see, Guy, that some of the competitors are higher, probably again on that outlook for robust demand for travel as the year presses on.
I think it's also worth noting that since Monday, the stock is up by 3.6%. So a little bit of a drop down this morning, but on the week, the stock is certainly elevated and flying a little higher. Abigail, thank you very much indeed. Well, as Abigail was just mentioning, shares of American Airlines down today. But as she also mentioned, the company beat profit estimates, capacity remains limited, though, as we continue to see staffing issues really across the whole airline sector. Costs, therefore, remain elevated. It's not just staff, it's fuel, it's airports, it's all kinds of issues that are impacting the industry right now. Derek Kerr, American Airlines CFO, joins us now. Derek, the outlook looks pretty solid right now. You obviously are, like the rest of the industry, facing a cost issue. How much longer can higher fares compensate for higher costs?
Well, Guy, first of all, I just want to thank the American Airlines employees for everything they did. We went into this year to get sustained profitability. We talked on the second quarter. We were profitable on the second quarter. And once again, we're profitable in the third, and we're projecting a fourth quarter profit. So, and yes, you know, from a cost perspective, the CASM is high. We call it cost per ASM. It's high really due to the fact that we haven't flown as much as we want to from an ASM perspective due to the constraints that are in this industry, from pilots to aircraft deliveries. You know, that's going to be here for a little while. So we'll have a little higher cost. But as you can see, our profit in the third quarter and now profit projections in the fourth quarter, even in an environment where we're not flying as much as we want to.
So that really, hi Derek, good morning. So that really pairs with what Guy was saying, that you're going to sell more seats to make up for the costs that are continuing to rise. And I'm wondering how much longer you can do the former. You guys mentioned the sort of like work travel / vacation business, that this is really helping you guys. How long do you think that trend continues for?
Yeah, I mean, demand hasn't been any stronger in our industry for a long period of time. You got to remember what we've been through over the last few years. You know, we've been through our own type of recession where, you know, we haven't been able to grow over the last few years. So, you know, the economy has grown 5% a year since 2019. Airlines have been unable to grow at that level. Airfares have only grown at about 2 to 3%, so there's a lot of room there. We're only back to 90% of 2019 levels of capacity, and we just guided 2023 capacity to be 95 to 100%. So the industry isn't even back up to capacity levels of where 2019 is, with a demand environment that just is as strong as it's been, and we don't see any signs of that abating as we look into the holidays and into the fourth quarter.
Derek, where do you think the biggest growth is going to come from going forward from here, domestic or international?
I think it'll be international. I mean, right now, from a domestic perspective, you know, the recovery has been for us on the domestic side and in the short haul international, which is the Caribbean and Mexico for us. So you'll see the environment get a little bit better as we can grow on the international side. And from a regional perspective for us, there's still some more growth available on the domestic side, but most of the growth will be on the international side.
So domestic really benefited you guys. Internationally, though, you have Delta and United really take on a lot of growth there. Can you compete with that as international continues to grow, or are you going to be at a disadvantage because your domestic area is so much stronger?
Oh no, our domestic really feeds the international. So the stronger we have as a domestic network, the stronger our international can be. As you recall, we were having delivery issues with the 787 aircraft. Those are now coming in. We have those aircraft and able to fly those internationally. So you'll see as we go into 2023 that our international footprint will be larger than what we had in the past. We will get out of some of the international flying that wasn't profitable for us for a long period of time, but we'll shift that into profitable international flying going forward.
Derek, are those 87s being fueled by the strong dollar? There are a lot of Americans over here in Europe right now, and I'm wondering, is it basically that international pickup basically down to the fact that the buck goes a long way right now?
Well, I think it's a couple things. One is just growing it back, to where we were. We're not even near where 2019 level is, and people really do want to travel, and they want to travel internationally. So you've seen that pick up from some other carriers, and you're going to see that with us as we move forward into 2023.
I'm getting on my first international plane tomorrow morning. I haven't been on that in like 4 years, so this feels huge. Derek, in terms of the cost structure, though, when do you think we're going to see the top in the non-fuel cost part of the business?
Yeah, I think what it really is a utilization issue with the airline industry. It's not a cost structure. We're built to fly more than we can fly today due to the constraints in aircraft and due to the constraints in the pilots that we have. So as we grow the airline back over time, we're going to grow it back much more efficiently than we are today. And that's where you'll see the cost structure and the cost chasm pressure come down over time.
In terms of what kind of environment you're building the airline for now, Derek, how different is it to the pre-pandemic environment? Is it a different market now, and if so, how?
It's a little different. I think the way people are traveling today is different than they've traveled in the past. You referenced it earlier about the blended trips. I mean, we're seeing that. Business is back 100%, but business is back because small businesses are flying a lot more than they have in the past. So that is back, and it's back full. The leisure is back full. Corporate is only back about 80%, but they are driven by this blended trip. So we saw RASM up, our revenue metric up 25% year over year, even in this environment. So I think the blended is offsetting some of the corporate coming back. I think the corporate is going to come back, and I think international growth coming back will be a huge benefit as we move into 2023.
Derek, final question. I thought I'd already asked the final question, but they're giving me another one. As you look forward and you think about the unit economics of running SAF, what are you looking at? How much does that price need to come down, do you think, to run the airline economically without significantly raising fares?
I think it needs to come down a lot. I mean, the issue today is supply. There's just not the supply out there to be able to do it. And there's a lot of work being done with the government and with companies that are trying to help produce SAF and produce a lot of it. The problem is there's just not enough today. So the cost has to come down a fair amount, and we're involved, and we're working very hard with companies like Breakthrough Energy and others to work to get SAF costs down so that it's economical for us to fly and for us to get to our zero emissions by 2050.
Hey, Derek, we really appreciate you spending some time with us today. I know it's a really busy day for you, Derek Kerr, American Airlines CFO. Thank you very much. All right, coming up, we're going to look at the fallout from the resignation of UK Prime Minister Liz Truss. Terry Haynes, Pangea Policy founder, said it is a market plus on multiple fronts. We'll get his take next. This is Bloomberg.
Long term, the UK has some great attributes. It's a country that has a real magnet for talent, particularly in London. It's got rule of law, transparency, liquidity, an English-speaking population. And so we think over time, capital will come back to the UK.
Keeping you up to date with news from around the world, here's the first word. I'm Ritika Gupta. Ukrainians are being warned of rolling blackouts because of damage to the country's power infrastructure from Russian missile attacks, with President Volodymyr Zelensky urging people to use as little electricity as possible. Zelensky has said about 30% of Ukrainian power stations have been destroyed since October the 10th. And Italy's Silvio Berlusconi has told lawmakers that President Zelensky forced Russian President Vladimir Putin into an endless war. That's according to audio obtained by an Italian newswire. The recording reveals the existing pressure on the right-wing coalition that won elections last month to soften Italy's stance towards Russia. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Alex.
All right, Ritika, thanks very much. EU leaders meeting in Brussels today, and that's where they were when Liz Truss announced her resignation. We're starting to get some reaction from world leaders, including President Biden, who thanked Liz Truss for her partnership. We also heard from French President Emmanuel Macron.
France, as a nation and friend of the British people, above all wants stability, especially in the current context. In a context of war, of energy crisis, it is important that the United Kingdom regains political stability very quickly.
Well, joining us now from the European Council building in Brussels is Bloomberg's Maria Tadeo. And we all remember, of course, Liz Truss saying that Macron is, we don't know if he's friend or foe. What's the international reaction to Liz Truss's resignation?
Although, to be fair, Alex, and I'm not sure how much we hear what Liz Truss has said or hasn't said at this point, but she did say 2 weeks ago that Macron was a friend of the UK people, and both agreed that the only foe for Europe is Vladimir Putin. But really, this news dropped as we were all waiting for European leaders to gather through and, of course, give their initial remarks, as they always do before a summit. For a minute, it was complete silence, and everyone then went, wow, she's resigned. I asked that question to the French president immediately after. How do you feel about this? What is your reaction? And you played it there. He said at this point there is a global challenge that affects both the European Union and the UK. You have the energy crisis. You have the war in Ukraine. We need a strong partnership. And the UK, he hopes, will regain stability very quickly. I also asked him if he was sad about the news, and he told me, and you can read and make of this what you want, I'm sad just like you would be when a colleague goes. Whether you're expecting a little bit of emotion or not, I guess I leave that to you. But I have to say again, they did not have a lot of time to bond because she was, well, at the helm of the UK government for a very brief amount of time, and they only had one bilateral meeting.
Yeah, maybe there's a bit of schadenfreude, I suspect, maybe floating around that building behind you, the council building. Let's talk a little bit about what comes next, though, Maria. What kind of a relationship does Europe want with the UK?
Well, look, I think they'll tell you one thing, one that is constructive, that of course makes good on the Brexit deal, and in particular one that works for the Irish government. Every time there's tensions, I put this question to European diplomats, and they say, well, what matters really is that relationship with the Irish because of the geography of this Brexit situation, which is key. Now, the other thing, too, is that at this point there has been, I'm not sure if a lesson, but maybe perhaps a warning that when it comes to the economic situation that everyone, and I should stress everyone, this is not just the UK, but Europe in general is facing this winter, perhaps this is not the time for fiscal experiments.
Maria, just before we let you go very quickly, the EU energy plan, that's really what leaders are meeting there for. Where are the biggest areas of disagreement thus far?
Yeah, and you make a very good point, because if I have to talk or just list the concerns today, it really is not the UK, it really is not Liz Truss. That was an spontaneous reaction clearly to the news, but minds here are completely focused on the energy situation. And Alex, we know the story. This is about the cap, dynamic cap, however you want to call it. There's a growing number of countries that say we have to set a limit to gas prices in the market. The Germans, however, continue to block that move. They worry about the implications for supply, and their priority at this point is not so much the price, because they have the cash, but making sure they have supply. So I'm told this is going to be a thorny night and a long night here in Brussels. You know, the night is young.
A long way to go. Maria, we look forward to your fantastic coverage as ever. Thank you very much indeed. Bloomberg's Maria Tadeo joining us from the Council building in Brussels. Let's get more reaction now to the resignation of Liz Truss. We're joined by Terry Haynes, the founder of Pangea Policy, a US policy and politics think tank. Terry, what kind of a government does the UK now need?
Fundamentally, Guy, what kind they need is one that stands up in the markets as a stable one more than anything else. The Conservatives have the opportunity to do that since there's not going to be a general election for another 2 years plus, unless called by the sitting prime minister. But fundamentally, they need to regain trust in the markets, number one. And number two, they need to spend some time regaining trust with the general public, which I think is frankly going to be harder. But markets, as you've already remarked, see this on the path back to normality. The general public is going to have a much tougher time because of the initial market reactions to plans that didn't even get a chance to be voted on, and the economic fallout from those. So a very tough time.
Hey, Terry, play the odds for me. Obviously, Rishi Sunak name out there, Penny Mordaunt, Ben Wallace. Also, Boris Johnson seems to be in the running there. Walk me through the odds of all of them there.
I like Sunak on about 70%. I think I wrote this morning, I think he's the overwhelming favorite, and certainly there's a lot of advantages here. He's much liked by the markets. His whole platform was about tax cuts last rather than first, which will play very well into the markets generally. And he was runner-up, but very much liked by the parliamentary party. So more smoothness in politics. Yep. I'll give you more chance though that you get somebody like Mordaunt and Badenoch, maybe occupying the other 25 to 30%, kinder, gentler face to go up against labor social differences, social policy differences, and then sort of rock solid on the economic stuff. Boris is taking soundings, and I never thought he was out. I had him at 10% after he resigned, but I think that's unlikely.
Yep. Does it matter who's in 10 Downing Street as long as Jeremy Hunt remains in 11 Downing Street from the market perspective?
Jeremy Hunt or someone like him, sure. I mean, you could see Sunak coming back, but Jeremy's clearly got the whip hand here on all these things, and so far has done quite well. So he will continue with that. Dare Labour to frankly to take any other view, and Labour's more than well enough proved it's capable of stepping into that particular trap. And Conservatives will spend the next couple of years making themselves back into the preferred party of the British economy, and frankly sharpening differences on social policy, I think, to regain some footing politically.
Hey, Terry, on the flip side, what can the Labour Party do to flex its own muscles right now?
Well, aside from their leader, Sir Keir Starmer, asking for a general election, I think the biggest thing they need to do is to become very credible very quickly. We tend to forget in these sorts of weeks that